All right. Mhm. All right. It looks like I'm live. Let's now share my screen here. All right. So now let's put this right here and let's now share the screen on Zoom. Got it. Okay. Share screen. Number one. All right. Perfect. Perfect. I love when a plan comes together. Now let's go to the live chat and see if you got any comments. Good morning, everybody. Eric, how are you? Let me just mute this to make sure there's no sound. And now we are live. Good morning, good morning, good morning, everybody. I hope everyone is doing well. Eric, thank you for being here. And let's talk about markets. Now, my name is Roger Scott, and I'm the senior strategist for the Trading Pub. And folks, before I begin, please, please, please like this video, subscribe to our channel. And if you don't know where to find me, just go to Roger-Scott in the YouTube channel. Or just type in Roger Scott and you'll find me. I do these videos every morning, and soon I'll be making announcements that I'll be doing these videos. So we'll have a nice big crowd. For example, yesterday we had, I think we had about 30 people here. In the afternoon, we have about 300. And people really like this. So I hope you guys enjoy this. I'm well, Eric. Thank you for asking. KRE, we'll look it up in a bit, but let me talk about the markets and give you guys a nice little outlook for what to expect. So let's talk a little bit about global economy. Now, remember, folks, tune into my VIP room, subscribe to my Telegram channel. All of this info will be posted below this video in the descriptor. So yesterday, let's talk about yesterday before we get into today. Advanced micro devices climbed over 1% on optimism that the company's new AI. Anytime you hear AI, something's always making a move, will boost profits in the coming year. Also, casino stocks gained ground after Nevada Gaming Board reported a 22% increase in November gaming revenue. This is one of the reasons why I said that the markets are not the markets, but that stocks are really good with the gambling right now. I talked about Wynn, I talked about Caesars yesterday. They were big, 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 big winners. We had the Labor Department jobless claims report, not a major report, didn't do anything as the number has been below 200,000 for a while now. And NASDAQ 100 is up 54% this year. And I'm going to talk about momentum in a few minutes. We're not backing away. We're actually increasing. There's now an 83% chance that the Fed is going to at least cut rates by 0.25 at their meetings. And by the way, if you're just tuning in, welcome, 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 hello, and say hello to me. Please use the chat, say hello. Eric did, and I want to see others. I get excited when I see people here. Remember, I'm doing these live now. So we have the PMI later today. The PMI comes out at about 9:45 in the morning. It's not going to be a huge report, but it's something we have to pay attention to because volatility and volume is very, very low right now. And we need to be prepared for that going into next week. We typically rally till about the 4th of the year. After the 4th of the year, the market tends to subdue a little bit. And I'm doing really well. Thank you, Eric. Um, Talking about stocks, and this is something I really wanted to talk about. First, let me finish this real quick. Europe, we're gaining a little bit of tailwind. Media and energy stocks are gaining. Energy stocks were not gaining here yesterday. China closed higher. The yuan reached the highest level against the US dollar since June. Its anticipation in 2024 is narrowing interest rate differentials, ease capital outflows. Everybody is focused on the Fed lowering rates. And again, I don't think it's going to happen until at least May. Nikkei is not giving us any tailwind. They closed slightly lower. Energy stocks lost ground. In China, they gained ground. The other country, they lost ground. Go figure. A lot of random trading action, but I wanted to focus on momentum right now. And I wanted to show, and if you're just tuning in, please, please, please come in and say hello. The chat is open in the YouTube channel. So here's what I wanted to show you. This is the percentage of stocks in the S&P 500 that are trading right now above the 50-day moving average. And I talked about this yesterday, but look at where we're at right now. And I'm going to go 10 years. Look at this, 1, 2, 3, 4, 5 times. That's the 50-day moving average, okay? Now, here's where it gets really interesting. Let's look at the 200-day moving average and a few sectors. Look at the NASDAQ 100. This is the 200-day moving average. This is the number of stocks in the NASDAQ 100 trading above the 200-day moving average. Notice that when we come to these levels, we tend to really back off hard, hard. So we're there right now. We may go a little bit higher. We may sit around here like we do sometimes. But folks, once we get to these levels, it's very, very hard to keep the market momentum going. It's almost impossible, okay? So that's something you need to pay attention to, and that's really, really important. And that's the 200-day moving average. That doesn't bode well for tech stocks. What about technology? Just technology in the S&P. Look at Infotech. This is the stocks above the 200-day, 10 years, I'm going back. How often do we reach above these levels? Not very often. Now, I've got a couple of other ones for you I want you to look at. Look at financials. Look at that. Look at that. That's a 10-year chart. And anybody who says this time is different, no, folks, this time is not different. It's not different at all. As a matter of fact, nothing is different. The markets have been moving the same way for decades. Look at the real estate sector. Same thing. Interest rates. This is all very, very much interest rate driven. And if you look at KRE, which Eric asked me to look at, the regional banks, you will see that they're meeting the same type of faith. Not on a momentum level wise, on a price level wise. Let me show you. There we go. So you could see they're breaking up here, but if we can't get above this pivot, Eric, right here, if we can't get above this level right here, which is 54.50, the odds are it's going to retrace and start filling in this baby gap and start going down. I would be very, very careful with these levels right now. And remember, regional banks are still not 100% on the level, and interest rates have not started going back down. And economy is not in the type of shape that people think it is. Borrowing right now, consumer borrowing is past $1 trillion, and debts are only going higher. So again, if you look at the percentage of stocks trading above the 50-day moving average, we are topping out here. If you look at financials, we're getting near the 10-year high. If you look at NASDAQ 100, we're at a 10-year high. If you look at Infotech, we're very close to a 10-year high. So right now, I don't believe we're going to see a lot of upside from these levels. And by the way, folks, today at 11 a.m., I have my VIP room, and I want you guys to register for an event for free. Let me post this in the chat so you guys can see it right here. There we go. There's some links for you guys if you want to join my my VIP room at 11 a.m. today, where I'll go through options and stocks and all the good stuff. And if you want to register for my Turning Point event tomorrow, which I will be giving you 3 hot stocks that I believe will crush it in 2024, and 3 stocks that will completely disseminate in 2024. So that's coming today at 11 a.m. Don't miss out. And I just posted the link in the chat. And folks, I see there's 13 people here. I do these usually pre-recorded, but I decided because I don't want to process them that I'll just do them live. So if you're here, say hello to me. I want to hear from you. Adam, how are you? Yeah, definitely catch the replay. So again, momentum levels are something to behold right now. Now let's look at the bond market real quick. The bond market, it's what's driving this rally right now in stocks. And yesterday, let me show you this. Yesterday, we went up, and then today we're already closed below this level. So if the bond market starts cooling off and starts bringing us into this is the trend line right here. Right here. That's the trend line. If this trend line breaks, not if the trend line breaks, when this trend line breaks, I'm going to tell you right now, there's a really good chance that the bond market is going to take a crapper. And once the bond market takes a crapper, the financial stocks that are right here will go down with it. The infotech stocks, all of this is interest rate driven. So you got to be really, really careful. And I'm telling you that 2024 is setting itself up, especially the first couple of months of the year, to be disappointing unless the Fed backs up this notion that they are in fact lowering rates in March. Good morning, RIC. Good morning. Good morning, Adam. Good morning, Eric. Say hello. There's no harm. And folks, what I'll start doing is scheduling these in advance. I'm just getting warmed up. This is my first week of doing these, or my second week of doing this. I'll get warmed up and I'll start scheduling them so you guys will get a notice and an update when we do. If you want to get an alert when I'm live, just join this channel and subscribe to this channel and ring the bell, and it'll notify you when we're going live. Now, small caps. Somebody wanted to talk about Jody. Hello, Jody. IWM. Oh, yeah. Let me talk to you about IWM for a minute. Let me show you something. So I drew these lines here a couple of years ago, about a year and a half ago, and they've come true. The question now is, are we going to rally from here? Good morning, Robert. Are we going to rally from here, or are we going to come down? Here's the problem again, and momentum levels are great for this. Look at this. Let me show you this. I was actually looking at this. I'm glad you guys reminded me. Ivano, how are you? Look at that. Now we got 16 people here. Good. We get to about 330 in the afternoon, and we get about 700 replays of this one. So if you look at the Russell 2000, let me show you guys this. You asked about, who asked about IWM? Jody, you asked about IWM? Let me show you this. This is scary. Here's IWM. 10 years. We're at the highest level in IWM above the 50-day moving average in 10 years. Look at this. And what happens every time we come up here? It comes down. So if I saw a breakout in price, I'll show you what I'm talking about. If I saw this, hey, Chasen, how are you? Good morning to you. So if I saw price here, so this is the technical chart, and this is the momentum levels, okay? So if I saw IWM around here somewhere, like right here, maybe up here, and I saw this, I wouldn't be too nervous, but we're literally at a breakout level right now. And with the Russell up here, I don't think it's going to go much higher. So what I think is going to happen is one of two things. I think the Russell's going to come right back down to this level right here. Well, it's definitely going to come down to this level. It's going to have to test this level. I think the Russell's going to come down to this level and either back hard up from it, but when it goes down, it'll relieve the momentum levels, because when this kind of consolidation happens, momentum levels get released. So we may see something like this over here and then a pull back down. But very, very, very hard to believe that the market is going to continue moving higher when you have the percentage of stocks in the Russell 2000. And again, right here, trading above the highest level in 10 years. That's significant. Hey, Steve, how are you? Good to see you. And I'll see you guys all in the VIP room. The link I posted in the chat. So again, momentum levels, folks, momentum levels are really, really rough right now, and we have to be careful. Now, looking at sectors, let's see, 6 weeks ago, home builders, retail, Russell 2000, real estate, mid-caps. This is all interest rates. Let's see if it's shifting. 3 weeks ago, semiconductors, home builders, Russell 2000, retail, mid-caps, and QQQ, real estate. I mean, semiconductors, interest rates. Now, let's look in the last 5 days. Same thing. Interest rates. Healthcare is starting to come up, but mid-caps, retail, real estate, Russell, semiconductors, very, very speculative. But notice healthcare and consumer staples are creeping up. Now look at 6 weeks ago. Look at consumer staples. Where were consumer staples? Right here 6 weeks ago. Where was healthcare 6 weeks ago? Right here, right? What about 3 weeks ago? Healthcare is still here. What about consumer staples all the way down here? But let's look in the last 5 days. You're welcome, Jody. The last 5 days, consumer staples is up here and healthcare is up here. Do you know what that's telling me, folks? Markets are beginning to become defensive. Healthcare and consumer staples are very defensive sectors. Healthcare is not interest rate driven. And consumer staples are things people need, not that they want. So regardless of interest rates going higher or not, you're going to have consumer staples, um, you know, priced accordingly. And when you see consumer staples and healthcare start rallying, that means interest rate sensitive stocks should start going down. So to summarize everything, do I believe that this market is going to go down, have a crash? No, no, no. What I believe is I think the Fed is going to push the ball to May or June. I mean, July in terms of raising rates. And I think that's going to disappoint a bunch of investors who are right now really, really gung ho on the fact that prices are going to continue, that interest rates are going to continue going lower. I don't think interest rates are going to go higher, but I don't think they're going to go much lower, not for the foreseeable future. And I think that's going to be a major, major wrinkle in the market to overcome in the next couple of months. Now, folks, thank you for being here. And before I let you go, Algos. I forgot to talk about Algos. Algos have been attacking the small caps and all interest rate sensitive stocks. The biggest algo players have been semiconductors, Russell 2000, real estate, and retail right here. This is where the algos have been. And typically, when algos accumulate a lot of things, they hold on for a while and see what happens. So I think they're done accumulating, and I'm watching healthcare and consumer staples very, very closely. And when you look at the percentage of stocks that are moving higher, if you look at performance, let's just take a quick look at healthcare. Look at healthcare 600-day moving average. It's only at 67 percentile. Look at financials, 93 versus 67. So there's more upside in healthcare. How about consumer staples? Well, 37%. So don't be surprised to see these numbers decline, but consumer staples and healthcare to start holding on. The only question mark there is energies. I don't know what's going to happen to energies because they are not really driven by the S&P 500. And if you look at the energy sector right now, let me just look at the US fund right here. You will see that energies on a longer term basis, they're not doing really well. They just went up and now they're about to test this level. So, and with interest rates going down, if they in fact going to go down, it would actually make a lot more sense for that to happen. So, energies are not looking all that great because we're now starting to go into a deflationary period. But keep an eye on consumer staples and keep an eye on keep an eye on what was it? Consumer staples and healthcare. This trend line, it has to break this trend line. If it doesn't break this trend line, nothing's going to happen good with energies. And if you look at here, if you look at energies over here, you'll see that they're similarly meeting a very similar type of faith. They need to break above this level. And right now, they don't look so bullish. Now, folks, before I conclude, if you've been following my work this year, well, you probably know that I spent the better half of this year developing what might be the most coolest and the most successful, profitable system for retail traders. That's right, Pro Trader Dashboard and the Trading Pit. It's a revolutionary software that tracks the moves of institutional investors in real time and gives us signals in real time. Now, which means we can pile into the exact same stocks that institutions are buying when they're not really very active right now, obviously, but they'll begin again next week, week after next week. Now, over the last 2 months, I've leveraged this game-changing tool to issue more than 60 trades, 61 trades as of yesterday. Closed trades. All trades have been closed. We just opened another one last night. And we've had not a 93, but a 94% win rate or a 93.7% win rate. No back tests, the real deal, real trades, real performance, time-stamped, no monkey business. So as we kick off 2024, we leverage this tool together. And do you guys want to see it? Well, click on the link below, and here is the link right here. I'm going to give it to you right now. Let me just post this in the chat. Right here. I don't know yet, Steve. I have to figure that out. I got to figure out what my start time will be, but I'll start scheduling it so you guys will be able to see it. And it'll be there in advance. I just have to figure out how to do all that. So as we kick off 2024, and we are kicking off 2024, we can leverage this tool. So want to see how? Well, click the link below. You'll get all the details, and you'll get my top 3 market predictions and my #1 stock for 2024. do it right now. And there's a link in the chat. Eric, Ken, how are you? And by the way, look at the shirt I'm wearing, my Clyde assistant shirt. Thank you, Ken. Thank you, thank you, thank you. I love it. I love it. I'll see you guys at 11 a.m. with a lot more details. If you guys don't know how to get there, here, go to rogerscott.com/VIP. That's the link, and it happens, and it's going to happen at 11 a.m. Eastern Time. 11 a.m. Eastern Time, and don't miss out. All right, folks, I will see you at 11. Have a great morning, and it'll be slow today for obvious reasons. I mean, I'm not going to push trades. Please be careful. Any questions, email me. Roger, here, let me give you an email. Roger@rogerscott.com. And they even made another one for me, rogerscott@rogerscott.com. I'll see you guys later. Have a great day and give me feedback on the live goodies. Thank you, guys. Bye.